Hi, everyone. Welcome to another webinar with eAssist. We are really excited to be bringing you this information today. A couple housekeeping notes before we get started. First off, we will make sure that the slides and the recording for today's webinar get emailed out to you probably by Tuesday of next week, so you can look for those then. For the webinar today, there's two ways you can communicate with your panelists that are here today. One, you can chat with them by submitting a chat below. You can either send a chat to all panelists or all panelists and all the attendees on the call as well. The other way you can send us any questions you have is using the Q&A function at the bottom, two little bubbles next to each other. When you submit a question there, we'll make sure it gets answered in our live Q&A that we'll do at the end of the webinar. With that being said, that's all I've got for you guys for housekeeping notes. I'm going to hand it over to you, Dr. Anderson.
Thanks, Sarah. Thanks a lot. I appreciate it. We hope that the hour you spend with us is helpful. We all need to understand a little bit more about forgiveness from time to time in our lives, right, guys? And the PPP, I'm so grateful for the PPP. Three practices I got it for, we had significant amount of money that came in, and now I need to know how do I not have to pay it back? I know, Warren, you had a bunch of money that came in too, if I recall.
Yeah.
Don't you have like 50 practices, if I remember, right?
Yeah, right.
Well, what we hope to learn.
You're right about that. I do not want to pay it back.
I don't want to pay it back. None of it. So we are confident, but by the time you're done with this call, this webinar, you will know how to not have to pay it back. And with some of the changes they made on June 5th, I don't think any dentist has to pay it back if you do some things right. So we hope that by the time you're done, you'll see what kind of modifications were made to the PPP forgiveness, how to apply for it, what documentation you need to prepare, and start preparing now, gathering or delegating that to people you trust to gather all that. It can be significant depending on some details there. And then help you strategically decide as a dentist, when are you going to apply for forgiveness? There's different options. There's a few other changes too, but let's make an introduction. Who are we? My name is James Anderson. I'm a dentist, founded eAssist Dental Solutions. I've built 9 dental practices, chairman of the Roseman Dental School Advisory Board. You can see credentials there. I love being a dentist. Taylor, who are you?
Hi. Well, I am, as you know, I am your brother, and it's great to be on the panel. I'm a business lawyer with almost 17 years experience. Was a former partner at a Salt Lake City firm and then co-founded my own firm a number of years ago. I've been with eAssist full-time for a little over a year. Yeah,
you were so expensive. We had to bring you in on the payroll to make it. Okay, Brian.
You're getting the killer rate.
That's right.
It's good to be with everybody again. I can't believe we're still talking about PPP loans, but here we are. Some important stuff today. But I'm Brian Borg. I've been practicing dentistry for 14 years now, and I've started 3 dental offices. That's me. I'm just a dentist trying to get through this like everybody else.
Thanks, Brian. Glad to have you here. Dr. Willis.
Yeah, so James, you and I went to dental school about graduated 18 years ago, so we've both been practicing for some time now.
That's right. And you sat behind me, right?
That's right. That's where I got all the answers.
No. You were number 5 in the class. I was 45, so I don't think you got any answers from me. But.
Yeah, so started 11 practices, building them, different practices since then for people. Yeah.
Yeah, we're grateful for you. Well, who are we? eAssist, most of you on the call know who we are. America's #1 dental billing service provider. 850 team members strong now, as of today, serving thousands of dentists. We've won a bunch of awards. Why are we doing this? Our core purpose is to deliver peace of mind. Everything we do is to help us as dentists have peace of mind. We know how difficult it is to get those margins just right, to keep your staff from gossiping from time to time, to keep patients happy when they're upset and say, no offense, doc, but I hate coming to the dentist. How many times have you heard that in your career? Our goal is to help deliver peace of mind any way we possibly can. That's why we're doing this. That's why we do what we do. Remember, we're dentists helping dentists. Taylor, why don't you tell us this legal disclaimer here? What is this all about?
I'd be happy to, since I wrote it. We're not giving tax or legal advice. Of course, we're not covering all details, requirements. Those continue to change, and we anticipate, the SBA has said that they will continue to provide more guidance. Of course, you should consult with your own professional advisors. That said, though, we're really excited to share with you what we've learned and our dentists on the panel, what they're actually doing.
That's right. We want to start with a poll. Those that are, please participate. If you're a dentist, what capacity are you running at your practice now? We opened ours in Utah. We had a surprise announcement April 22nd. We could open up and see hygiene again. It wasn't supposed to happen until May 1st. I know some states didn't open until June 1st. Some states may even think about closing down again with some of the current trends. But as of right now, are you at 100% of production of where you were before the virus hit? Are you at 75%, 95%? Non-scientific poll, but interesting nonetheless. Okay, Sarah, it's coming in now. Let's see what we have here.
Yep, looks like we've got
50% of you have voted.
Yep, we have about 47% who have voted so far. So if you guys want to participate in this poll, and it'd be great if you do, you'll just see that pop up on your screen. You can just select any of the one options. You'll see there it says, at what capacity are you running your practice? The options are 100%, 90%, 80, 70, 60, 50, 1 to 49, or I'm closed. So 0%. Yep.
Well, nobody's closed.
Yeah, 60% of the people have voted. Why don't we close this in about 10 seconds? Or close it now. All right. Okay, before you go ahead and share it, Brian and Warren, talk about your practices and what capacity are you at right now?
Sure. I think we're at a 90% capacity right now. The last 2 months, we've been about 90% where we were before all the shutdowns and government regulations took place. How about you, Brian?
Well, it's interesting. In Utah, we were able to open up. In May, I would probably have said that I was about 80%, but this June, I would say that we're almost 100%, maybe even having a great June in comparison to last June. But the flip side of that is in Utah, we're starting to see a little bit of a spike. So we may be anticipating it going down again. But that's where we've been the last 2 months.
Yeah, I've been the same in the two practices that I have that have been established. One's for 15, 18 years, the other for 10, about 90%. But in the newer practice that's been established just for a year, we opened the doors wide open, and now we're hitting the best month we've ever had. I mean, it's not big, 40,000 in that practice in production, but I'm surprised how many people are coming, and I'm glad. And we even had a patient that had COVID. We didn't know after the fact. We got a phone call from the state of Utah. We pulled out a tooth. We did all of that, and we did dentistry, and he was actively he had COVID, but we were all tested. 5-6 days later, no one tested positive. So our PPP is working. We are infectious disease experts. We know how to work with people that have HIV and COVID. So we're happy. That was a sigh of relief when the test came through. It was like, okay, well, good. We don't have to close down or have our name on the news. Like your office, Brian. Wasn't your name on the news once?
Yeah. The news nowadays is pretty tough. But it's interesting. I'm looking at these polls that more than half are over 70%. That's great news.
I think so too. I like to see that 100%, 20% of them, 20%, 90, 80, and those that aren't open yet, or I'm sure there's some stories there we could learn from each other, and hopefully we have a chance to share these ideas. Interesting poll. Thanks, Sarah, for throwing that up. Well, let's just do a quick overview of the PPP loan. Warren, will you just summarize this very quickly for us?
Sure, you bet. So, of course, we're all aware that the PPP loan was a way for the government to give some funds to small businesses to help them through this time when they thought a lot of businesses were going to be affected by the pandemic. As part of the CARES Act that was passed on March 27th, we had 4.6 million individuals who have applied and been approved for the loans. And unlike most loans, the borrowers are eligible for unprecedented forgiveness. We hope everybody's going to be forgiven, and it sure looks like that's the government's intention. They really don't want the money back. They want everybody to utilize it, qualify for it, and not need to pay any back. So today we're going to talk about the Flexibility Act.
It's a big deal. And Taylor, would you mind summarizing the expenses that qualify for forgiveness?
Yeah, no problem. There's some exceptions and additional requirements, but in general, payroll, group health benefits, rent, mortgage interest, other business debt interest, as well as utilities, so long as they were in existence as of February 15th of this year.
So you just can't pay yourself a bunch of rent all of a sudden and try to add that onto the forgiveness.
That's right. That's right.
Is that right, Taylor?
That's right.
Okay. All right. So what happened with the Flexibility Act? Well, it passed June 5th, and there really are 6 major changes. There's some other minor ones too, but there's 6 major changes to how the forgiveness works, giving us a lot more freedom, especially for dentists where we couldn't open our practice. We might have gotten, remember, the money was running out, right? And they had to go tap it off. They weren't sure if it was going to be tapped off. And so we got our loans April, like the middle of April, as fast as we could. We couldn't open until we were thinking May 1st, but then we opened up April 22nd. So I think we had a little bit better in Utah than other places, but there are some places that didn't open up until June 1st. If you got your loan May 1st and you had 8 weeks, you're in trouble. These changes were designed for dentists. I know the ADA was lobbying hard, and I have to say hats off. I'm sure their lobbyists were heard here, as well as other industries too. And so we're going to be talking about those 6 changes, also talking about how this affects us. And here's change number 1. Most of you heard about this. It was groundbreaking. It changed my strategy. I know it changed yours, Warren, and
Yeah.
Brian, it changed yours. But can you just summarize this, Brian, for us? What
Yeah,
exactly
sure.
does this mean?
The biggest thing here is that we have more time to spend that loan money that we were given. So originally we thought we only had 8 weeks to spend it all. It was all going to be contained within this 8 weeks. And just recently now they've extended that to 24 weeks. Like you were saying, James, a lot of dentists couldn't open up. So we had the money in our bank account, but we couldn't spend it because we couldn't be open. So to your point, this really helps us out as dentists. We now have 24 weeks, basically six months to spend this money, and just more time.
I know we're going to talk about this. You can actually choose if you've already used it all up after 8 weeks. You can choose to go in and start forgiveness now. You don't have to wait till December 31st. Isn't that right, Taylor?
That's right. That's right. I think the next slide covers that. Regardless, if you haven't gotten your PPP loan, everyone has to get it by June 30th, or at least start the process. But if you already had your loan in place, which I assume is the case for most of our listeners, before June 5th, then you can choose whether to use the 8-week forgiveness period that you were already planning on, or the new 24-week forgiveness period.
Yeah. And that's really can be kind of gradient, right, Taylor? I mean, we can use it at 15 weeks too.
Well, right. You technically be using the 24-week period, but you could apply early, right? Yeah, you're right, Brian.
Yeah, great point. We'll talk more about that too. Okay, big change, major change number 2. Warren, explain this for us.
So previously, you had to spend 75% of the loan on qualified payroll expenses in order to receive 100% forgiveness of the loan. And so the other 25% could be spent on rent, mortgage interest, utilities, but 75% had to be on payroll. Now they've changed that, so only 60% has to be paid on qualified payroll expenses. And now you can use up to 40% on, rent and interest and utilities. And that, of course, is over, if you choose, the 24-month period, which should be very easy to reach both of those percentage marks.
That's the point I want to make. Remember, they gave us 2.5 times what our payroll costs were for last year for this loan, thinking that we had to use it all up in 2 weeks, or I'm sorry, 2 months, 8 weeks. So they're giving us 2.5 times what we normally would do, not 8 weeks worth, but 2.5 times. So like 10 weeks worth, so to speak. And we had to use it up in 8. Now they're saying we're still giving you the 2.5 times of your expenses you have for payroll usually, but now you got 6 months to spend it. Mm-hmm. That's 6 months of rent. And if you want to spend all of it on rent for 6 months, 40% instead of 25% can go towards forgiveness now.
Yeah.
That's a big deal. That might be
big flexibility there.
Oh yeah.
Yep.
Some people have unemployment, don't want to come back to work. They built some things in, some rules around all that too. And so that just it makes it almost impossible not to have the whole thing forgiven.
Yeah.
Would you agree with that, Brian?
Yeah, agree, 100%.
Yeah, big deal. Okay. Taylor, would you kind of fill in these details about the 60%?
Yeah, sure. So, and if you're in a unique situation and for whatever reason, you want to apply for forgiveness, but you haven't hit that 60% minimum threshold for payroll, all is not lost. You can still get forgiveness, but you'll see the example here on the slide. Basically, the government will take whatever amount you use for payroll that's included in the forgiveness amount that you're requesting. They will now consider that as 60% of the total amount that they will forgive. So, again, you see in this example, if you had a total of 100 grand in forgivable expenses that you were applying for, but only 54,000 was payroll, your total forgiveness amount would be reduced to 90 grand. You'd be forgiven for the 54, and you'd only be forgiven for 36,000 of the other permitted expenses. So it just starts to ratchet down depending on how far below 60% you are on payroll.
Yeah, so it's a gradient. Is it linear? So it appears so that if you don't get it all 60%, at least you get most of it forgiven still, and then there's some paperwork and things that help you calculate that. We'll talk about that here before the webinar is done. Okay, let's do another poll. Brian,
Sure.
what do you want us to get here?
Okay, so now that we have this 24-week option, what will you be doing to be changing about your strategy? So Sarah's going to pop this up. You have several options. The first one is, are you going to hire more people? Are you going to reduce payroll added to use up the loan? Are you going to reduce extra hours added up to use the loan? Increase your hours, give bonuses to team members to use up the payroll, or I won't be making any changes. There is some strategies here that change because, as you mentioned, James, we were working under the assumption that we would only have 8 weeks to spend it.
Yep.
So my strategy's kind of already been used.
Mine too.
I've already done it. But there should be a lot of people out there that maybe their loan origination was a little later, so they have some time to maybe change their strategy a bit. So
this is an example where the early bird got the worm, but you didn't want that worm.
Yeah. I gave out some nice bonuses that I guess hopefully makes my employees like me better.
Yeah, they like the emotional bank account deposit. That's all good. Doing good. It always comes back. But you didn't have to do that. And
there may be some time, maybe some play for some to change their strategy, and just curious if anybody's going to do anything different.
Looks like there are some people that are going to change their strategy a little bit. A strong majority are doing what we're doing. They won't make any changes. We're planning on 8 weeks of being forgiven, and we're already set to have everything forgiven after 8 weeks. And we should have it almost all forgiven. I think the extra 10 weeks or maybe 12 weeks will be helpful for us just to make sure we dot every T, dot the I, cross the T, and then we're in business. So looks like we've got 60%, 50% that have voted. Let's wait 5 more seconds. It's coming in now. All right, please go ahead and close that, Sarah. Share that.
Here we go.
So your peers are making, most of them, 60% of us, 67, almost 70%, aren't going to make any changes, but there are some that have some more time. They can increase the hours. They can give some bonuses to gobble it up. They can hire some more people, reduce even payroll. So this is interesting, right? What do you think about that?
Yeah, that tells us that most people are on track to opening their offices. And that's great.
It's great to see people hiring more people too. That means people are back and healthy. So,
but for a good majority of our listeners, actually, their practices are at 70% or higher capacity. But those that are below 70%, it makes sense now to cut back on hours and do some things and save that. You have 6 months now to use it all rather than using it all now. So helpful.
Yeah.
Okay. We all wish it would have happened early, that this would have been a part of the CARES Act, but beggars can't be choosers, and we've all been beggars here. Our hands are out. Help me, Uncle Sam. So
that's right.
It is what it is. Okay. Thanks. All right. Taylor, can you explain about the full-time equivalent rules that are now in place with the Flexibility Act?
Absolutely. So, a lot of this was before the Flexibility Act. There have been a couple of additional clarifications in the recent SBA forgiveness applications. And so we've kind of captured, all of that here, and we're going to talk more about, a couple of additional changes that are important to these. But as a reminder, if you have fewer full-time equivalent employees, the apps show you how to calculate that, during your forgiveness period compared to a prior period that you select. Then your forgiveness amount will be reduced by that percentage decrease. So there's one potential decrease to your forgiveness amount. And then the other potential decrease could come if you reduce a particular employee's total wages by more than 25% during the forgiveness period compared to the first quarter of this year. If that happens, then the forgiveness amount is reduced by that dollar amount. Dollar amount higher than the 25% reduction. So the 25% is kind of like a deductible. And now one of the things we're going to talk about here, if you played with either of these, laid off employees or reduced wages, between February 15th and April 26th, but then under the CARES Act language, if you eliminate these reductions, you may not be penalized for doing that. And again, the government wants to incentivize everyone, get things back to normal, even if society isn't quite ready for it, and we're going to pay for it.
Yeah. Well, and these details are all, if you're filling out the form, we'll talk about it before this is over, the details are filled out in the schedule, like filing your taxes or like filling out a W-9 form or W-4 form. You know exactly, that tells you exactly, and then you calculate what your forgiveness is based off of the schedule. So you can gloss over some of these details. But the important thing to remember is that if you reduce your pay to individual people, and they do look at individual employees that you have, by more than 25%, you are at risk of not having it all forgiven. If you reduce it by 10%, you're fine, right, Taylor?
Yeah, and if it's an employee that was making more than 100,000 per year, it doesn't apply to them. You can do whatever you need to that wage, and it doesn't impact your forgiveness.
Yeah. Okay, we'll talk about some more of those details about when you can restore it.
Yeah.
You have a 6-month time frame now, and
Important detail there.
why don't we talk about it now, Taylor? We'll talk about it twice. Can you explain that?
Yeah, absolutely. In fact, if you bump to the next slide, the Flexibility Act makes clear the old deadline for restoring your FTE count, full-time equivalent employee count, and your wages, so you're not dinged by the 25% or more reduction. It used to be June 30th, and the law said, hey, if you do it by then, you won't be penalized. The Flexibility Act makes clear that now you have till the end of the year, to do that, or your application date, right? One of the questions is, though, because the SBA, on top of the actual legislation, they come out with rules, and then they also come out with their recent forgiveness applications. And their application, in my mind, with respect to the potential wage reduction, muddies the water just a little bit in terms of, well, if I just reset my wages and then I apply, am I okay? Did I get the exception? Or is it some average that I need to have in place for a while, before that exception can apply to me? I think without question on the full-time equivalent, everything I've read and including the applications from the SBA indicate that if by the time you apply, you have restored your FTE count to a prior level, then even if it was, fairly soon before, you won't be reducing your forgiveness amount because of that.
That's an important note. And it doesn't have to be the same employee. If I had 2 employees that didn't want to come back because for whatever reason, maybe the unemployment was too good, or they just
Right.
As long as you hired 2 more that came in, that
Yeah.
be the same name, same people, then you qualify.
That's correct.
That's right. For the FTE, that's right. It's not employee specific.
But the salary rate is employee specific.
Yes. Yes, that's right.
Yeah, important to understand that difference. Okay. All right. Okay, Taylor, please fill in some more details here.
Yeah, a couple other important things, especially for dentists. If employees turn down rehire offers, right, and you can't hire someone to fill their spot, then you won't be penalized for the FTE or the pay level, exception. So you won't be penalized in that regard. And then if and this is the big one for dentists, and in my mind, I think it's got to apply to all dentists across the country. If you can't return to the same level of business activity because you followed COVID-19, guidelines or mandates, local, CDC, or otherwise, then you won't be penalized for, again, not restoring FTE employees.
What are you telling me? You're telling me all this talk about FTE really doesn't apply to us because the CDC shut us all down and state health board shut us down? We like fit that box, that checkbox? Is that right?
Yeah, it looks like you do.
But what are we talking about this for? What's the big deal?
Good question.
We want to show people how smart we are.
No. We want to make sure they understand. We all understand. We have peace of mind. No, we're doing it right.
But it is important to remember that you are required to document it. Shouldn't be hard for dentists. You got to show a decline in business, and then you got to pinpoint to the either the CDC or the local or state guidelines that you were following, and then even show your compliance. You also, on the first one, if it's an employee that turns you down, they want you to document your offer in writing. They want to see the rejection in writing. They want to see your efforts to rehire in writing.
Is there something in Dentrix where I can click a button and that all happens for me before I go for the day?
I wish.
They made it so easy. Larry Gibson and the team made it so easy. Okay, this is a big deal. This is important to understand that all of these rules in place. Remember, this is for every industry in the whole nation. Dentistry specifically, we've been affected by this. We couldn't open our doors. We couldn't practice. And so if you're not at the level, if you're at the 70% level and you have to let some people go, it's okay. You'll still be forgiven for the entire amount, is what Taylor's saying. If you follow all the other rules that are in play, but these don't apply to us anymore because the state shut us down. Is that right, Taylor? You
won't be deemed by a reduction in your full-time equivalent employee numbers, okay, because of one of these exceptions, right? So that's not going to be something that would reduce your forgiveness amount.
Yeah. Okay.
Yeah, just keep documents, and you should be good.
Documents. Yep. If you don't write it down, it didn't happen. Isn't that what they taught us at dental school? Oregon?
That's right.
And okay. Warren, what about this slide? What's number 4?
Okay, so this is also important because before, once the cover period ended, you had 6 months to apply for forgiveness. But now you actually have 10 months, and that's at the end of the 24-week period. So now it can't be, your 24-week period can't extend past December 31st of this year. But basically, you have 10 months from the end of your cover period or December 31st to get your application filled out for forgiveness. And if you don't do that, then of course you're going to start making payments, interest payments on the loan.
Taylor, can you fill in some of those details, Tay?
Yeah, and so if you do apply for forgiveness, which we hope everyone here does, then your deferment period on anything that wasn't forgiven will start when the SBA actually kicks that forgiveness money back to you. But otherwise, if you don't apply, again, hopefully very unlikely scenario for everyone, then it would be 10 months after the end of the year, essentially, your 24-week period.
Why would anyone not apply? Like this is not applying for forgiveness. So this doesn't apply to any of the smart 200 that are on the call. We're all applying for forgiveness. And the bottom line is that when you apply, if you don't get the whole thing forgiven, and we should, because we now can include rent for 6 months and everything up to 40%. But now if you have another 10,000 left over, it's deferred until the SBA gets their act together indefinitely. You don't have to start paying on that. Isn't that the bottom line here?
Yep.
Okay. Who knows what'll happen? There's a lot of people that I just apply. The bottom line is apply as soon as you can, and then you'll have the whole thing forgiven. And this doesn't apply to you. Change number 5, maturity. This is a big one. I'll take this one. You know, in the CARES Act itself, it said that it authorized the Treasury and whoever was putting together these details that they could offer these PPP loans up to 10 years in the actual act itself. And then when it was interpreted and rolled out, they cut that down from 10 years to 2. What that meant is that anything that wasn't forgiven, you had 2 years to pay that back. And so many banks have, because they're the ones that gave out the money, have entered into agreements. They've executed these contracts, quote unquote, with the Treasury, and have these 2-year notes everywhere. That if you have a note like that, the 4 million people that have already applied for that, most of you that are on this call, your loan, if you don't have it deferred, if you don't have it all forgiven, will be mature. You'll be due in 2 years. Any new loans as of June 5th, that it's now a 5-year window instead of a 2-year. So if you have another business or another dental practice that was in business before February and you haven't done it, go apply for another PPP. They haven't run out of money yet. They're still giving it. And now you got 5 years to.
The only thing I'd add to that, James, is if you were like me and you applied before June 5th and you don't get it all, you would need to negotiate. If you wanted that 5 years, you'd have to negotiate that with the bank themselves.
Right. You have to go back to the lender.
Yeah, and we've gone through that there. Okay, change number 6, the last major change. Taylor.
Yeah, under the CARES Act, it already provided for deferment. You had to pay it, but you could defer out for a couple of years employer side taxes on payroll. Now and the CARES Act did say, though, if you get a PPP loan, you can't also participate in that benefit. Now they've changed their tune. Hey, if it helps free up cash, you still have to pay it, but PPP borrowers can also defer 50% of those employer share until 2021, and then the remaining 50% until 2022.
Now that seems really complicated to me. I'd have to pay an accountant to do that, maybe $1,000 to make sure I figure out the deferment and then pay it.
Set an alert on your iPhone. Money's due today.
So Brian, are you going to do this? Are you going to use
I'm
this?
sorry, I just ignored this one. Yeah, it got too complicated. I don't think it's going to play for me. Some people may take advantage of it, but it seems like a lot of work just to get a little bit.
You know, I'm so grateful I became a dentist, and not only are we healers and doctors and we help people intrinsically, you know, with their health and also feel better about their smiles and who they are, but we have a recession-proof industry. We really, really do. And this is the biggest test of that theory. 2008 and 9 was a breeze for most of us, but that were dentists, but many of our colleagues really struggled, or many of the, you know, the economy really struggled in different industries, but not dentistry. And so this is taxing us to the core. But I could see many other industries needing this, but I imagine most dentists don't. But you can, it's available. It's going to cost you some money to make sure you get it done right. In the end, you have to still pay it anyway. It's not like forgiven or free money that you don't have to pay back later. It's just deferred. Okay, a summary of the changes. We'll just go over this very quickly. Again, you have more time to spend the money. You have 6 weeks, 6 months instead of 2. The amount you have to spend on payroll has been reduced to 60% instead of 75%. That's a really big change, especially when you have 6 months now of expenses to use the money up on. Restoring employees and pay levels without a penalty has changed. You don't have to do it until the 31st. And for dentists, for the most part, we might not have to even do that because we've been affected. Our businesses have been affected by the shutdown with mandates saying we couldn't operate. The deferment period, if you have extra money left over that isn't forgiven, can now go for up to 10 months if you don't apply for forgiveness. If you do apply for forgiveness, then it'll be whenever the SBA gets around to it. So instead of a 6-month window, it's like, give us time, which is nice. The maturity date's been pushed out on all new loans. It's now 5 years instead of 2 for anything that's left over that's not forgiven. Now, again, for most dentists, now that it's 6 months, it's going to be forgiven for most of us. I believe that very strongly if you follow the guidelines we're offering here. Delayed payment for employee payroll taxes. You don't have to pay. You still have to pay it later, but it can be delayed. All right, let's talk about the application process. Now, we are going to do some Q&A before we're all done. So I know there's some questions coming in. I can see them now. And we'll get to as many as we possibly can. But this is section 2 of today's webinar. Take a look at this. This is the standard forgiveness application. You can download it on the webinar here. When you get these slides, you can click on it. It'll link right to it. You can go to the SBA website, do a little Google search for this. You'll find it. We'll link it on our website too. But it looks similar to the application form. But it does ask for some extra stuff and calculating things about full-time equivalents, and also there's some things you have to fill in that can be time-consuming. So because there are other companies or other industries like dentistry that were mandated to shut down and have been adversely affected by COVID, that in a way that wasn't necessarily natural, and that we can apply for what's called an easy forgiveness application. You can see it just looks better. It's easier. It's a PDF that you can fill in. So I don't have to print it off even. I can use an annotated signature, right? Can I? Maybe, I don't know. But it's just super slick. And we're going to talk about the differences here in a minute. Taylor, can you summarize the differences between these two applications?
Yeah, the big difference is, as noted in the title, the easy form is easier. It's shorter. You're providing, the standard form has a couple of extra worksheets and schedules. They require more documentation around FTE, employee headcount, as well as wage reduction. And so you're doing less of that in the easy form. And we'll talk about why in a minute, how you qualify to use the easy form.
Let's talk about that right now.
So
okay.
three main options. James, you want it? You want me to?
Take it.
So if you're self-employed or have no employees, use the easy form. Or if you did not reduce salaries or wages by more than 25%, compared to the first quarter, and you did not reduce the number of hours of your employees between the beginning of the year and the end of your covered period, then that would be another reason, number two, that you could use the easy form. Or number three, and frankly, we think this is going to be the one that would apply to most dentists. If you experienced reductions in business activity because of COVID-19 and you didn't reduce salaries or wages by more than 25% compared to the first quarter, then that's another reason. If you qualify in any one of those three, then you can use the easy form.
Well, that's the important safety tip. That's
Number
like
three.
If you drop below 25%, you're crossing the streams, and that's bad. You can't. You don't want to do that. You got to make sure. Don't go below 25%. We've all had the experience of the COVID. Just watch that. Hopefully, that's the one takeaway. If you know all this stuff and you read some stuff already, maybe that's one thing you didn't quite piece together. That's one thing that I had an aha moment with when we went through this and prepared the slide deck. That's a really big deal. You can reduce the wages. You just can't go below 25%. And we're all affected, so we get to fill out this form, we believe. Now, when you're filling out the forms, it doesn't matter which form you're going to fill out, either the standard or the easy, you're going to have to prepare the same documentation for the most part, with one minor change, and that is less detailed documentation surrounding the number of full-time equivalent employees on the easy form. And on the application itself, on the very last page, it tells you which documents to gather. This is a summary of those documents. So you can take a picture of this or just download the forms and then go look at the documents and you can see it all and start that process of gathering it now. There's no need to wait until you're done to gather that. I'd start gathering it now and delegate that to people you trust. Okay. Absolutely. Any comments about that, Warren or Brian?
No, I agree with you. I have already had that conversation with my accountant and said, will you please they're tracking it on a spreadsheet, because as soon as it's done, as soon as I know I should get 100% forgiven, I would just rather apply for it and be done with it. I don't want to leave things to chance. Just like when we applied, I didn't want to just wait till the very end and apply because I didn't know if the funds would still be available,
That's right.
And so I applied early. And I'm going to apply for forgiveness early in case something strange happens in the fall and they shut down our businesses again.
This is nugget number 2. This is the second thing that you might not have picked up on other presentations, and we hope that this is helpful for you. Our recommendation, dentists talking to dentists, is that you do exactly what Warren just said. Can you repeat that, Warren, and explain why?
Yeah. So let's say in August, by August 1st, I know I have spent well over 60% on qualified payroll expenses. I have 40% on the rest, or maybe, and I should be forgiven for 100%. I'll fill out that easy form because my business was affected by COVID government regulations. I'll fill out the easy form with my lender, sit down with them, and I'll apply to be 100% forgiven from the loan. But I don't want to wait, because what if in November or December, when I was going to apply at the end of the 24-week period, I have to shut down my business again because of another big outbreak of the COVID virus or something. And now I don't have any employees on, maybe I'm out of business or something. I just rather be forgiven as soon as possible.
Yeah. Brian, do you feel differently?
No, that's the take-home message, I think, from this whole webinar, is that the phone call that we should be making, I made it 2 days ago, was to my accountant, like Warren said. I asked, how much have I spent on my payroll? I wanted all that information. And I'm looking for that cross that line, that 60% line. And as soon as I cross that line, I'm going to start putting my things together. I'm going to contact my lender. That's another thing that we ought to mention, that just like in the application process, it was a little bit lender to lender. I do think that this forgiveness thing is going to be a little bit lender to lender too, because we've got to go through the lender for the forgiveness. So once we cross that 60% line, that should be our next phone call, is to the lender and say, okay, what's the information that I need for forgiveness, and start gathering that in to get it into them.
I think our credit union that we went with, Warren, up in Idaho, they just took the standard application. They didn't make their own online application like what so many banks did. And so I'm
Right.
assuming they're just going to take the same standard PDF that the SBA's released for forgiveness because that's their style.
Yeah.
But if your bank didn't do that, if your bank actually wanted something else and wanted you to log into a portal and put in a bunch of extra stuff that was never asked for by the SBA, and I know Zions Bank did that. I think Chase Bank did that.
Chase did, yeah.
And those aren't derogatory statements. It's just the way they did it. Those were facts. And so, yeah, you want to ask them, okay, what's the new portal? What do you need to have me gather? The SBA says this, and I want to make sure I make you happy too. Okay, let's talk about the forgiveness process. We've alluded to a few of these things, but now we want to summarize it and emphasize it. Taylor, would you mind taking this?
Yeah, you want to submit your forgiveness application no later than 10 months after the last day of your particular forgiveness period. Warren mentioned that. The reason is because the SBA has said if you don't, then your deferment ends and you start having to make payments, right? And so you want to make it within that time period. Of course, you'll see on the forgiveness application, you're required to make certifications about truthfulness, just like before on your actual loan application. You can apply early. This has been mentioned too, before your forgiveness period ends. You want to make sure when you do pull that trigger though, if your period hasn't ended, but the numbers look good, you want to make sure that you're not going to be dinged for a wage reduction, and you shouldn't be dinged for the full-time equivalent employee decrease like we talked about earlier for dentists. But you want to make sure, really mostly it's going to be a wage issue, because if you are below that threshold, the government's going to calculate that out for the remainder of your forgiveness period and ding you for it as though you waited to the end and didn't fix the problem. So you want to watch for that. And then once you get your application in, the lender has 60 days to make a determination. And then the SBA is supposed to, within 90 days, after hearing from the lender, remit funds or reject or ask for more information. Hopefully it's remit funds.
Yeah. Okay, great. And if you have any questions about what we just went through, we're going to get to that before we're done. We'll have plenty of time here. We're almost finished with our prepared notes. Okay, just a summary again to additional PPP changes. We've alluded to a few of these, but we want to write them down. Taylor, would you please?
Yeah, let me just touch on some of these. And again, there's a handful of SBA rules. There's several different sources that these come from, and so we're trying to track them here. But the SBA has said, look, if your loan was for less than $2 million, we're going to assume that it was necessary and that you as the borrower made the appropriate certifications in your loan document. We're not going to come looking at those loans unless there's some special reason to, at least with respect to appropriateness, right? I think they were going after some big companies that were in the news or big organizations and trying to make clear, smaller loans they're not worried so much about.
Hey, the Lakers gave it back, all right? Give them a break.
Yeah, I know. I didn't want to mention names, but so of course your 8-week period or your 24-week forgiveness period, it can start, if it makes more sense for your company, on the beginning of the next payroll period, and then it'll run 8 weeks or 24 weeks that way. So they clarified that. If you do have an FTE reduction that causes a reduction in your forgiveness amount, you won't also be dinged with a 25% or more wage reduction. And I know that was a question we got sometimes too. And then of course, and I think I saw some questions on this during the webinar here. But if someone is fired for cause, resigns, requests a reduction of their hours, this will not count against you, even though it reduces your FTE count.
Wow.
Kind of common sense, but it was nice to have the government say it.
That's great.
That was great insights. Important minor changes.
And I think there's just a couple more here. There are some new limitations for owner employees. So not your other employees who don't own, but owner employees. There's some caps now on the amount of compensation that you can be forgiven for. Again, you see the details here. If it's 8 weeks, then it's 8 weeks worth of 2019 compensation, or a maximum of $15,385. Again, owner employees. If you use 24 weeks, it's 2.5 months worth of your 2019 compensation, or a little over 20,000, whichever is less. And then again, encourage you to work with your accountant. Depending on the type of entity you use, there may be some additional restrictions or limitations in determining the amount of forgiveness for owner employees.
Okay, well, that's important to know.
Great.
Thanks, Taylor.
Yep. That's worth $5,000 basically there for the 24 weeks, right?
The 24 week. Yeah.
Yeah.
Not having to come up with it with other kind of non-payroll expense. So.
But just like the PPP and how it was clarified at least 4 times in a period of 3 weeks, I think this will probably, and this is the second clarification of forgiveness. I think you'll find that this may be clarified again. If we have another outbreak or something and we're asked to close down, I'm sure it'll change again. Who knows? But just as of right now, as of June 26th, this is accurate and hot off the press.
Yeah, the SBA's actually said they will be doing providing more guidance because there's still some questions.
Okay.
Yeah.
Hey, Brian, let's do another poll.
Sure. We've seen that a lot of people have reopened. More than half of 70, or most of us have reopened. So we want to know when you're planning for to apply for forgiveness on your PPP loan. Sarah, will you pull up those options for us?
Absolutely. Launching that poll right now. You guys will see that show up on your screen.
Great. You see, after the original 8 weeks, you know, I was talking with these guys earlier and thinking that I'd be able to get there at 8 weeks, maybe 9 or 10 weeks for me. But as soon as you're done with using the funds, which is probably the one I would select, but wait until the end of the 24-week period for procrastinators. For a full 10 months to apply for forgiveness. And I am not applying for forgiveness. I can't help you there. I don't think you're listening to this webinar if you're one of those people. But if someone selects that, we know they're just kidding around. I didn't apply for the PPP loan. And again, can't imagine. Unless they got 1 day to do it, so it'd be good to do.
Yeah, the right now there's one that hasn't applied. Go apply right now.
Just think about it. A year from now, you could still possibly not apply for forgiveness a year from this date. Wow. If you have that 10-month window. I hope everyone's done it a year from now by now, but it's a long time.
Yeah, but if you're really busy, I guess you got a long time to do it.
Go ahead and close. All right, this is fun banter, guys. Let's go ahead and close that. Let's close that down. We can see most of our colleagues, Dr. Warren, Dr. Borg, we're in the same boat as soon as we're done using the funds. And I think it's going to be around week 12 for me. Mm-hmm. And then I'll put it in and apply, and then it'll all be tied up and I'll get 100% forgiveness. And the beautiful thing is, guys, because we are in a recession-proof industry for the most part, and I know some of our colleagues on this call are struggling, but the majority are open above 70%. We're still making money, even during this problem. And we have all this PPP money that's come in now, and it's all going to be forgiven. It's like that. Not only did we make our normal money that we're making every month, but that offset our losses when we were closed, perhaps in March, the end of March and April. And so I'm so pleased and grateful and thankful for what Congress did and what happened here. Let me explain. I have a friend in the Ukraine. He's a part of the eAssist team, does a bunch of stuff for us. And he said, you guys are so lucky. The Ukraine can't do anything like this for us. He has his own business and he's just trying to make it work. And most citizens in most countries are the same way. I have some friends in Tunisia where Star Wars was filmed. It's a great, got to go visit. Same thing. They're all shut down. They all shut down worldwide. They all followed America's lead. And the EU is doing something, but America can print money and it doesn't really hurt our inflation as much as it would in Venezuela, other places where they can't do that. And there's different theories. Is because oil is traded in dollars, maybe. But my bottom line is I'm just so grateful for America. I'm so grateful for our profession. We really have fared well compared to others. And, we want to give as much as we possibly can back and show appreciation in all we do. So, okay, I'll get off my soapbox, but there you have it. All right, go ahead. And you can see we're all in the same boat here. Most of us have the same strategy.
Yep.
Great.
And the one person that hasn't applied, if you were being serious, get out and do it because June 30th is the deadline.
You got 3 days, 4 days. Okay, what are we going to do with our PPP loan offices? We already went through this, so let me pass on. Let's go to frequently asked questions. Okay, Warren, what is the forgiveness process timeline? This is a review.
Yeah, this is just a review. So again, you have to the end of your cover period, which if you elected to take the 24-week period, which I imagine the vast majority listening are going to, and then you would have the end of that period. So that period can't end further than December 31st of this year. But whenever that date is, from the date you originated your loan in 24 weeks, you then have 10 months to apply. It's got to be applied for before the 10-month deadline. And that's quite some time. So I hope everyone gets their application in.
It is. That's a big deal. Let's go back to this pro tip. This is an important tip. Warren, would you share this with everyone? This is nugget number 3. We don't want to skip it.
Okay. Yeah, when you've spent the funds on qualified expenses and you haven't reduced your full-time employees or wages more than 25%, you will get full forgiveness. So as soon as you've done that, please don't wait till the end of the cover period. If you know you're going to get 100% forgiven, once again, we just suggest get your application in, get forgiven. Don't leave things to chance.
We alluded to that, but we're emphasizing it and repeating it for emphasis. It's so critical and important, and it looks like most of our colleagues are doing that. Okay, frequently asked question number 2. Brian, would you mind taking this one?
Oh yeah, what should I be doing now to prepare for forgiveness of my PPP loan? So biggest things, I make that phone call to your accountant, to whoever does your payroll, find out where you're at today or in the next week, and see what you got to do. Also, the other thing, the other checkbox that we really haven't hammered yet is that make sure that you're over 75% on paying your employees. And once you get to that mark, and once you get across that 60% mark, we're there. We can start to
You said 75%, but you meant 60, right?
Well, 60%.
No, 75. Yeah, go ahead, Brian.
Sorry, 60% of payroll.
Yeah.
But as long as the wages haven't gone down below 75%. So that's one thing we haven't really talked about a lot here, and it is part of the application. And so if we've gone below that, then I would wait until we can get everybody back up to 75%.
And a good point.
And then once you're there, then that's when you cross the line where you can.
Remember, if you've gone below that, you have to use the standard application.
Right.
Because it's one of the things you got, and then the standard application helps you figure out what your forgiveness is, because it's not going to be 100% because you drop below the 75% of your wages were.
That's correct. And so the goal here is everybody gets 100%. The easy form is going to be the easiest way to get that 100%. So as long as you haven't dropped below that 75%, if you have, well, we're going to wait until within that 24-week period and try to get everybody up to that 24.
You got 6 months now instead of 2.
And
Right.
so those are the numbers that I'm preparing in my mind today to think about. Okay, well, when are we there yet, or how much longer until we are there? That's the first thing. The next thing, I'm starting to make sure that my lease payments are documented. The things that can be covered are documented, just so that I have that all that paperwork. I did note that a lot of the paperwork for that is just bank statements, so that should be recorded, but make sure they're being paid so that they can be presented to the lender.
So you guys, you're doing a lot of extra work, Brian. I have a lady at my front desk. She's so powerful. Her name is Kristen.
Pass it on.
And I have another one named Tara and another one named Pam. I love these ladies. I'm going to have them watch the
Brian's
video.
going to offer more money than you. Now he knows their names.
Oh, yeah. They won't leave. We treat them right. I'm going to have them watch the video, and then they're going to have them tell me what we should do.
Great
and
idea.
they'll figure it out.
Great idea.
Delegation level 7.
There's a lot of people on here, James, that will probably just use their accountant to fill this out. I know my accountant offered to do it for a small fee, and I may do that, but it's really simple. This preparing part of it, everyone should know where they're at, and it will only take 5 minutes to figure that out. Make a phone call to the accountant, figure out where you're at with payroll, and make sure you're making your payments.
Yeah, but it's all the my personality, maybe it's different than yours, Brian, but I hate paperwork. I'm gathering all the documents and stuff. I struggle with that. Even filling out loans, it takes me like 3 weeks to fill out a loan thing. It's just a real pain in the rear. So I'm having Kristen, Pam, and Tara do all that for us. Then the accountant will do the rest. Anyway, okay, let's go to the next slide.
That's why you're a CEO, James.
Oh, no, I'm just a guy. Okay, Taylor, I'm just a simple man trying to make a place in this world. That's from Star Wars. Okay, Taylor. All right, what is one of the prequels? All right, what's the FAQ? What is this one, Taylor? Is there any benefit?
Benefit.
We've talked about this, but can you summarize this again?
Yeah. So again, if you don't have to wait for the 24-week period, you don't have to use that forgiveness period. If you've already calibrated, if you're going to get full forgiveness and you're comfortable with your numbers, I don't see any need to wait. If you've spent the money right and you're going to get forgiveness, pull the trigger after your 8 weeks, get forgiveness, and move on. If you need more time to get full forgiveness, well, yeah, use the time the government's now given you.
Yeah, and 85% of our colleagues agree with that. Okay, we're going to open up the Q&A in just a moment. Our next webinar on how to have a 49% overhead, like what Dr. Willis has.
Yeah.
49% overhead.
Dr. Willis has better than 49%.
That's right. That's right.
Yeah.
But we want everybody to get to 49%.
Don't
We want
get cocky.
every
man.
dentist.
I know you were ahead of me in class, and you were the top of the class, but I got to get there too. We want everyone to get 49%. We had webinar number 1 called Mind Your Margins. We thought we could do it all in one. It's going to be 4 webinars, and maybe 5. It may turn into 10. I don't know. But we're going to get every little piece of information out of Warren's head that he's ever had and give it all to you, because we believe in the law of abundance. We want to deliver peace of mind. So
Right.
This is webinar number 2 on minding your margins, and it's July 31st. Part 3 would be July 28th. We hope you join us. You can register there, dentalbilling.com, mind your margins. All right. What we hope you've accomplished today, and our invitation to you now, is to apply for the PPP if you haven't already. And we know who you are. I'm just teasing. Create a thoughtful action plan going forward, like setting a goal right now. Begin with the end in mind. Habit number 2, Stephen Covey. Write down what I'm going to do when I'm going to apply. Is it a month from now? Okay, a month from now. Start gathering documents today and delegate that to the people you trust to make it all happen, your accountant or whomever. And then make sure you submit when your goal comes. Have the application signed by you and ready to go, so that there isn't any delay in case there's another outbreak or there's a W-shaped recovery. And then let's go be dentists. Let's be healers. Let's go fix some teeth and make people smile. And hopefully no one's upset. The laughing gas is a wonderful thing. The more we use laughing gas, the happier my Google reviews are. Isn't that weird? I didn't make the connection for all these years.
It's a pro tip. Pro tip.
We charge for it though, too. So, all right, question and answer. What do we have, Sarah?
All right, we have a lot of questions that have come in. As a reminder, if you have a question for the panel here, you can drop it in the Q&A bubbles that you see at the bottom. I'm going to start at the top. I know some of these have been answered throughout the webinar, so if it's already been answered in the webinar, I'll try to skip past it, but some of them may be worth repeating because I'm seeing the question over and over again. So the first one we've got here is from Emmanuel, and he asks, can I apply for forgiveness before the 24-week period if I have spent the money already, i.e. if I use it by 16 weeks?
Yes.
Yes. That's what we're suggesting you do as well.
And when you fill out the application, you actually fill in on one of the lines what your forgiveness period is. You put the dates. So you would just say you would have from this date to this date, and that would be 16 weeks. You apply.
Yep. The next one we have is from Aaron. He asked, if we applied as an independent contractor and no 941 forms were used to get the loan, can you still get forgiveness without doing a 941 form?
I think your lender is going to determine that, but I believe so.
I think, yeah.
Lender's going to be the one to ask.
Yeah, and there's, if you look on the documentation requests, like on the EASY form, which should apply to independent contractors unless they have employees, it gives you some other options other than a 941. That's just an example.
Okay.
We were summarizing at a high level all the details, but there were a bunch of either ors. So, yeah, great question, and that's the right answer, I believe.
Perfect. All right. The next question we have is from Cameron. Cameron would like to know, I guess when they initially applied for the PPP loan, they did not receive their full payroll funding. It was not a full 2.5 times what their payroll is. Are there any options for reapplying?
Mm-mm.
You're only supposed to have one PPP loan, so if they receive the loan, that's going to be problematic. They could talk with lenders about it, but I don't think so.
I don't think so either.
And when you say, Taylor, that they're only supposed to have one PPP loan, you mean per, I guess, individual?
Entity.
Per entity, per EIN number.
Right.
Contractor or entity, yeah.
Yeah.
Warren has 11 practices, so you applied for 11 PPP loans. I mean, you broke the bank there at the Treasury, right?
You were there with me. We were there for a long time.
I only applied for 7.
He was 4 million of the.
No wonder Pam has to do all that back work. You got 7.
I love Pam. Pam is great.
All right, great. The next question we have is from Victor. Victor said that they installed a bunch of new HEPA filters for each of their operatories. Do they have any option to use funds from the loan for any kind of office construction or improvement like that?
Mm.
Ooh,
I don't think, I haven't read anything that those would qualify as expenses. It's pretty specific that it's like interest, mortgage interest, rent,
Yeah.
utilities, but nothing like specific like COVID expenses.
That
well,
didn't change.
It does on the payroll. If you did it for payroll reasons, PPE, like a PPE bonus, you can count that. But I don't think about when you put it into your office. I didn't see that, but I'm certain if you use COVID PPE as a bonus, you can use that as your payroll.
You mean if you were actually giving it to your employees?
That's correct.
As a
Yeah,
bonus?
but
Because
not
it's a part, it runs through the payroll.
Because they have to go buy some stuff or
Yes.
something like that. Yeah.
But I didn't see anything in the Flexibility Act, Taylor, did you, that actually modified what those additional 40% expenses could be?
No, not in the Flexibility Act. I think I may have read in some of the SBA rules, there's at least 7 or more that have come out now, overall, that in addition to mortgage interest, I think you can get interest on other business loans, like even for a vehicle. You can
right.
also get rent, I think, on more than just real property, if there's rent on personal property. Again, this probably doesn't help this dentist, but I've seen a tiny expansion there in some of the SBA documentation, I think, but nothing specific in the Flexibility Act.
I think there's still hope for you though. Like we've said, I think 3 times in the webinar, that now that the money you received was 2.5 times what you normally pay per month in the past, and you had 8 weeks or 2 months to gobble that up. Now you have 6 months. So even though you can't pay for these extra expenses, just wait longer. Go all the way to December 31st. You'll have all those expenses baked in. That can now be 40% of what's forgiven instead of 25%. On top of the payroll too for 6 months. If normally your payroll that you pay that you got, if that didn't really change very much, or even if it changed a little bit, as long as it doesn't go dip below 75, then you've got 6 months to recoup all of that. I can't imagine you wouldn't have 100% of it forgiven.
One thing that's important to remember that just seems like a no duh, but the application, it basically states that you're not going to be forgiven for more than you got a loan for. So
What?
you can't get like a special tax credit or something like that. You got loaned $100,000, you can only be forgiven for $100,000.
That would be nice.
Not even Pam can work magic there.
I know. Yeah.
All right, the next question we have is from Tara. She asked if healthcare premiums are part of a payroll cost. I assume she means her employee healthcare premiums.
Hey, Tara, is this my Tara?
It's Tara Claridge.
Oh, no, sorry. Hi, Tara. Hi, Tara. Okay. What was the question again?
Yes.
Are healthcare premiums part of your payroll costs?
That's
if it's group health plan, right? It has to be group health.
I wouldn't say that. I'm not sure if it's a part of your payroll cost. I think it's part of that extra 40%. I could be wrong on that, but I know for sure it can be bundled into the forgivable amount. And the question is it a part of the 60% or the 40%?
That's a good question. That's a good point.
Right.
I'll look it up while we keep taking questions.
I think it's part of the 40%, but you're right. I think you're right. It's not payroll, but it can be paid. It can be used.
Can be used.
My simple answer to that is if it was used to calculate your payroll total, then it's going to be a qualified payroll expense. So if you weren't able to use it to calculate your total payroll on the 2.5, then it's not going to qualify to be a forgivable payroll expense.
Yeah, that's logical.
Yeah, that would make sense. All right, the next question we have is from Hope, and we'll come back to that one. Taylor, as soon as you confirm it, you just interrupt us, let us know. All right, so Hope Jacobson has a question. What if I want to keep my loan but pay it back at a very low interest rate instead of paying my staff?
You can. And you'll have 5 years, you'll have 2 years to pay it all back. You'll have to pay it back but the 2 years it's at 3.75%. And depending on how big that loan is, it'll be,
It should be at 1%, right?
because your 2 years, assuming that your loan is an older loan. If it's a newer loan after June 5th, it's 5 years. But 2 year, if you run an amortization schedule, 2 years, even at 3.75%, it's only 24 months. That's a pretty hefty loan payment if you had 100,000 or 150. But you can do that. That's why it's there. It's an option. You can turn it into that.
Got it. And Brian, were you saying that it's 1%?
Yeah, isn't this loan at 1% rather than the idle loan was at 3.75%?
Oh yeah, I might have misspoken on that.
This
I
one's
think it's
1%.
1%, but
That
And
is a low.
Yeah, this one is 1%. I did look
1%.
up payroll costs as defined in the CARES Act. Warren was right. In addition to wage, of course, payment required for the provisions of group health care benefits, and then some retirement benefits too. But that's all it says in terms of health benefits. So group health care benefits.
Right.
So I am going to make a comment on that last question. You know, I built a number of dental practices. Warren, I know you have two, and Brian, you have two, and they've all been scratch practices, every one. I've never bought someone else's practice. And so I've done this a lot. I've grown practices a lot. And you have to be open you have to be open to sell the goods, so to speak. You gotta have bodies there. You gotta have staff there. You gotta spend money to make money. And so I actually would highly suggest you reconsider that approach. I know it might feel more secure holding on to more money because you've got it and you're just not sure if you're going to make it, and you're going to keep your hours closed and repressed or what have you. If you're going to shut down hours and only be open a few days, it's going to be hard to get back on your feet. You got to open up 4 days a week again, if not 5, if not 6. Be open on Saturdays, be open on Fridays. Like if you do those kinds of things, I promise it just pops. But if you play it conservative and you don't believe in the law of abundance and more scarcity about it, and you don't like take the risk to bring people in and just pay them, it can be a real hard go. And I've seen it. I've experienced both firsthand. And when you just take the leap of faith and you decide to do it, and you open it up, turn the lights on, you look back 6 weeks later, the best decision you ever made, my opinion. Warren, what's yours?
Yeah, I steal that line from Field of Dreams. I always say, build it and they will come. You know, when I talk to these younger dentists, when I'm like, we got to open up another day, or we got to add a new hygienist to the practice, and they're worried about it, that the schedule's not going to be filled, I'm like, just build it and they will come. You know, and it works. It always works.
Hey, I shared that with you when we were building our first office together. Remember, you were so afraid, like, I don't want to do this, James.
I know, that's true. You did. I give you credit for that.
Like that was my dad's favorite movie. He was an entrepreneur through and through, and that's a classic entrepreneur. A boring movie, but it's an entrepreneurial's dream, right? Build it, they will come. Okay.
All right, guys. The next question we've got is from Terry. And the question is about the max deduction for employees within the 24 weeks, asking if that's changed. Looking for confirmation that is still $15,385.
Well, so if we're not talking owner employees, I think that number is increased. I'd have to go look and see, but I believe I read something about that acknowledges that, hey, a longer period means, you know, that the cap won't be as high per employee.
Yeah. Yep.
That would make sense.
And if the person who asked that question wants to email us, I'm happy to look that up specifically for them.
Yep. And if you guys do have any other questions, I'll go ahead and drop that email for you guys here. It's just webinar@eassist.me, and that'll go to our whole panel here. All right. The next question we have is from, let's see.
If you don't remember our names, just say, I want the bald guy to answer this one.
That's good. I'll leave me out of it.
No, Brian, I didn't mean that. I want the guy there to answer this one.
That's right. The guy right there.
All right, we also have a question from Dr. Showman. He asked, he's looking to keep about 8% of his loan in an account, just in case there's another shutdown. Can he still apply for forgiveness?
Well, yes, you can still apply for forgiveness. You might just owe some money if you don't spend it all. But yes, absolutely apply for forgiveness. You can keep a little bit, I guess, in savings account. If you're...
And the 8% that he retains, or he or she retains, would be a loan.
Mm-hmm.
You know, for 2 years or 5, depending on when the loan was obtained.
Or she can just pay it back immediately, right?
She wants to, but I think there might be an arbitrage opportunity. And I know some financial planners are saying it's a 1% interest rate. You can get it for 5 years. It's even better. Go put it in the stock market. Maybe you can get 12. That's kind of, you know, that's another theory. I never take those kinds of risks. I don't gamble stuff. I take educated risks that I feel like I'm in control of, and so I don't do that. But I think there's also some natural flow. If you go 6 months, even though you've taken 8% and put that money in a different account, the government doesn't look at what money you spent, and you got this check of 100,000 in your bank account from the PPP, and that money has all had like a serial number on it, and they check to see if you spent that serial number. They don't do that. If you take 8% and put it in a savings, you're basically taking 8% of your profits and putting it in a different account. And over the next 6 months, you're going to spend that 100,000 on payroll and rent and everything else. So you have the whole thing forgiven, and you just put your profits, 8% of your earnings in an account.
Exactly.
So, you might be surprised that if you're doing that strategy, I'd wait till December 31st. Hopefully that we don't shut down again. December 31st, and if you're going to do that strategy, and then apply after 10 weeks, after that, you got to make sure you apply for forgiveness before 10 weeks after that. And you might be surprised that you spent all the money anyway on just expenses. And that's just retained earnings.
Yeah.
And I think a question that seems a little bit related to this one as well is from Minaj, asking specifically about how they calculate the forgiveness. Is it based off of the full 24-week span or 8 weeks within the 24 weeks? Sounds like the answer that's 24.
Yeah, you can use any period of time within the 24-week, calculate it, and say, I've spent 60% of the loan on payroll and I've spent 40% on the other. Is how we understand it.
Yeah, I mean, I think technically you're either choosing the 8-week period of forgiveness or the 24-week. But if you choose the 24, then you can apply early. But if you choose the 8, then your calculations cut off at the 8, even though you're applying after that. And so you just want to keep that in mind as you're figuring out, hey, when does everything look good? When am I going to get the full forgiveness amount? I should apply now.
The whole purpose of everything, I think, in my opinion, is the government really doesn't want the money back. It wants you to be forgiven for 100%. So it's just giving you more time, making it easier for you to spend it legitimately and not owe them a dime. So.
And we have a question as well here from Nicole that I think we're going to blow her mind with some great news here. She said she got to the webinar a little late. She said last she understood only 10K of the loan would be forgiven. Am I to understand the entire loan can be forgiven?
Yes! And the flowers are still standing.
Santa Claus.
Ho, ho, ho.
And Nicole, you're probably thinking about the EIDL grant, and we have a couple questions on that as well. So we can go ahead and transition to that. But man, Nicole, this is a good day for you. We are so excited to give you that information. Yes.
Hopefully you got a lot on that PPP loan.
As long as you follow these rules,
Yeah.
keep people employed.
Got a lot more than 10,000.
Absolutely. All right. So one of the questions we had on the EIDL loan, specifically about the PPP forgiveness, is trying to understand how the EIDL grant, rather than the EIDL loan, it's subtracted from your PPP calculations, but how does that impact your percentages and your forgiveness?
That's a great question.
Mm-hmm. My understanding is that
it takes it right off the top.
This is
talking about the grant or the actual EIDL loan?
I think they're actually talking about the grant. They didn't, you didn't go get an EIDL loan, but let's say, for instance, you were given $5,000. I was given $1,000 on the EIDL loan, but let's say you were given $5,000, but you got that after your PPP loan, which you were given $100,000 in the PPP loan calculation. What they will do is, from what I understand, is add the 5,000 to the 105, and you will have to pay back $5,000 on the PPP loan side, because you can't get more than two and a half times and be forgiven for more than 2.5 times.
And Warren, my understanding is the way they do that is they actually take that $5,000, if we're talking about the EIDL grant, and they subtract that off of the amount that you can be forgiven for.
That's right.
Right, exactly.
So we get to the same place, but yeah.
Yeah, it gets to the same place.
Instead of 105, it's 95. You can be forgiven for 95 of it because you were already given $5,000. So you were forgiven for 100,000, but you're gonna have 5,000. You got 5,000 in your pocket. You got an extra 5,000 you got to pay off. That's what you're saying.
Yep. Yep, and I'm gonna owe $1,000. I'm confident at the end I'll have to pay back $1,000.
You know, it makes sense. When we were all filling that application, it said, "Would you like would you like to apply for the idle here?" You know, and scratch. We just applied for anything because we weren't sure if we were even going to open again, right? So we already got the money. We already got it. We already got the extra grant. Now you got that. It becomes a loan that you got to pay back. And okay, that's a great point.
And we had a couple other idle related questions. I think some of those got answered here, but there was a specific example that John asked. He said he received the idle grant plus the PPP. He understands that the grant gets subtracted from the PPP, which we just talked about. But is the 60% of the required payroll expense based on the PPP or the PPP minus the idle grant?
PPP.
Yeah, it's just based on the PPP loan itself.
Perfect. All right. Marianne also asked a question about idle. So she said she received the idle advance in the amount of $4,000. Does that amount have to be repaid or no? And we've kind of already answered this, but how do we treat that when we apply for forgiveness?
It's kind of like sixes. You don't have to pay back the $4,000, but in actuality, you shouldn't have been loaned perhaps as much in the PPP loan as you were, and so they'll want the excess back on the PPP.
If you step through the actual applications, there's a spot for it, and it'll make sense as you do that. A spot to put your idle grant amount.
Even on the easy application, is that right, Taylor?
I think so. I'll look. I was just looking at the standard.
And then we've got a question here from someone who I assume it's actually related to the idle as well. It's an anonymous question.
Both applications. Sorry, Sarah. Both applications, James. Yeah.
So Sarah, 1 second. So when you're done filling out the application and you include the idle information you had in the easy application that we think you can all apply and use, you'll know how much is not forgiven based off of the workflow and the worksheet and how much will be turned into a note.
Right.
And
if you had the idle money, very few people had the idle money before they applied for the PPP, but if you did, then that was part of the application process and it would have been subtracted off the total PPP loan amount. You wouldn't have got the full 2.5
Yes.
via PPP, but not very many people had it that way.
The theory behind all of that was to get business owners money as fast as they could, so to help prevent a recession and a depression. And now we're just, kind of mopping it up 6 months later at the end.
And again, these are great questions. Lean on your lenders. Many are offering to essentially fill out the form for you again, and so it should be a good resource for you.
Right.
Should be.
So this anonymous question that came in is asking, I believe, about the idle loan, because they're saying that they applied to 2 SBA loans. One of them was the PPP. The other one they don't seem to know the name of, but it had a higher interest rate of 3.5%. And they asked, what's the difference between these 2 loans?
Okay. Well, the number one difference is that the PPP loan, the idea behind it was that it was supposed to be used towards payroll, originally 75%, now 60%, and basic business expenses, and 100% of the loan would be forgiven. And it would be calculated based off of your qualified payroll expenses from last year for 1 month, and they would times that by 2.5. You just couldn't request $1 million. It was all based on the size of your business and how viable it was before February 15th of this year. The idle loan is something else. I've had a couple of, I applied for a lot of those too, and I've had a couple come in. And so for some of our dental practices, one dental practice, for instance, I had the PPP loan of $133,000 come in for one of them. And the idle loan that came in for that practice, and I haven't accepted it, was $89,000. You log into a different website. It's actually not done by a lender. It's done by the SBA directly. It took them a little bit longer to put it all together. In the last few weeks, they've been sending out these new portals that you log into, and they'll tell you how much they're going to loan you. And if I click in and accept it, then I will have a 30-year note that's not forgiven. But for 30 years, at 3.75%, I can have $89,000 to help with my dental practice. I don't need that, and so I don't want to take that. It's not free money like the PPP, but it helps you if you are having a cash crunch and you need working capital. Then you have the PPP, you can still take the idle, but you'd have to pay the idle back over 30 years. Now the interest payment or the payments on the idle loan will be like $80. If you amortize that out over 80 years, it's hardly anything. That's a rough figure back of the envelope. I could be wrong on that.
The other important thing to note, just in case somebody's wheels are turning, you can't go take that 89,000 and go spend it on anything you want either, because they want documentation, again, that you spend it towards
Business expenses.
the business itself. Yeah.
The use, a great point. That was the other thing I was going to say. The use is broader, the allowed use under EIDL versus the PPP. But to your point, Warren, it's still supposed to be business expenses, business working capital that you would have had except for, COVID-19.
And there's one more SBA loan that's applicable that was changed in the CARES Act, and that was the SBA Express, 7A Express loan. A similar type loan as the EIDL, but it actually comes from a bank, and you can actually use it to buy real estate. The interest rate's a lot higher. It's not 3.75 and it's not 30 years. But those are options that you have right now to take advantage of if you want to grow a business and buy another dental practice, for instance. You can use the SBA and the updated loans in the CARES Act to get preferred treatment here. And there's some advantages there. Now, if you want to learn more about all of that, in our very first webinar we did on the PPP loan, we covered all 7 types of SBA loans, 7A loans. And we also talked about the EIDL loan. And I'm sure on our website, you can go to dentalbilling.com and click on webinars and find that and watch that webinar and learn more and have all those questions answered.
Yep, it's on our YouTube page. If you go to youtube.com/eAssist Dental Solutions, you'll see a channel there with all of our webinar recordings.
Delivering peace of mind, one dentist at a time.
And that was actually, that spiel was a perfect segue to 2 other questions we have, Dr. Anderson. One of them was asking about the EIDL and if it can be used for office improvements and dental equipment. Sounds like the answer is yes.
Mm-hmm.
Yep. So Mark, that's your answer there. That's awesome. And then the other question we had was from Caesar, and he's asking in the sense of the build it and they will come message that you were sharing, would you consider this a good time to acquire new practices?
I think, it depends. I think if you have your eye on something, this is always a good time to acquire a dental practice. Dental practices on average are not evaluated as expensively as other likewise businesses out, in the economy. So if you see something that's very appealing to you and you can grab it and make it grow and make it be successful, and I wouldn't hesitate to buy something right now if you can get funds for it.
Now, it depends on a number of things. It depends on how well that practice was managed, how it was run, and the location. There's a number of things there. I have had one failure in the 9 practices that we built, and it was a scratch practice that had been a previous occupied dental office. And Brian, you and I went and thought, okay, we're going to save $200,000 or $150,000 on plumbing, and we're going to go buy this practice, or just kind of get it up and going and get the lease. Remember? And we did some stuff and got it better, and it would have worked. It would have been okay. It was just we weren't collecting very much, and we sold it to a dentist and had him carry the note, and it was fine. When we handed it off, it was making money, but not enough. And then he made some poor decisions, and then the practice went under, and we were carrying the notes, so we were stuck with it, and we decided not to reopen it again. So there's a number of things you got to be careful. I've got a lot of phone calls from, you're talking to scratch practice guys here, and your question was, should I buy another dental practice? And I was talking to a VC firm just yesterday, and they told me that their business is up 300%. They are buying companies left and right, and the companies in their portfolios are buying companies. What that means is you got a lot of people that are scared, and you got a lot of people that are selling when they shouldn't be selling, just like stocks. When everyone's selling, you don't sell. It's when everyone's buying that you sell. I know it's counterintuitive, but you don't sell at the bottom of the market. And so I told the VC firm, appreciate it, guys, but there's a song that Kenny Rogers sang once a long time ago. And I know when to hold them, and now's the time to hold them.
Yeah.
I know when to fold them. So I'm not in the market of any dental practices.
I had a phone call this week from one of our eAssisters clients, and he asked me this very same question. And one thing I gave him, one piece of advice, and maybe it applies in this situation, is I said, the only thing about buying an existing dental practice is you can't fix a bad location. So whatever it is, if you're looking at something, it better be a great location, because you can't fix that. after you purchase it. You can get new staff in there, you can change systems, but you can't change the location. And so I've looked at I've had people ask me to look at buying practices over the years that exist. One was behind a gas station. One was on the second floor of some building. You couldn't even tell there was a dental office in there. You just can't buy anything. It has to have a solid location for visibility.
Don't you have a big sign that says dentist and have a tooth that has blood dripping off the tooth?
That's right. If you can't see the blood, no, just kidding.
But I said something I want to clarify. I'm not in the market of buying a dental practice right now. I said, and it didn't make sense logically because I was saying, you got to know when to hold them, when to fold them, and now everything is depressed. So the answer is people are willing to sell dental practices right now for a bargain. And if you're in the market of buying a dental practice, as long as the state doesn't close again and we don't have a spike, there's a lot of unknowns here. And so there's the positive part is that people are selling because they're afraid for the most part. But the negative is we have an election, we have a lot of unknowns going on. We have people that are afraid of stuff. They might not go see the dentist, especially a new one. I don't understand that. And I can't control that risk. That's outside of my comfort zone. I sell options and options on futures, and I do some stuff on the S&P 500, and I never trade in the fourth quarter. That's my secret. I never trade in the fourth quarter because it's too risky. Too many things that are unknown, like October surprise and September stuff that happens, and then elections, and there's just Santa Claus rally and the January effect. There's too many things that are risky in the fourth quarter, so you don't do those kinds of things when there's a lot of unknowns. And I believe the same thing is true right now in buying a dental practice. But you ask a different guy, he'll tell you a different thing, and they both might be right. So everyone has their own point of view, and I know enough to know how much I don't know. So trust your gut, analyze it, and if you want to shoot over some stuff, I'm sure Warren and I and Brian would be happy to give you some advice of what we would do. But we would refer to our legal disclaimer that Taylor put together that we're dentists helping dentists.
Yeah, not giving investment advice. That's right.
That's exactly right.
All right, we do have a good handful of questions still left, so let's try to rapid fire through a few more here. This one from Krista is saying that she doesn't think she'll be able to use the 40% on the specific areas that are mentioned for the PPP loan. Can she use more towards payroll and still?
Yes, use it all on payroll.
Oh, yeah.
6 months.
Yep.
Yeah.
Any idea what the tax implications are going to be for the PPP loan? Are they going to are people who have taken it going to get double taxed, or do we have any inclination or information about that for Philip?
Yeah, we didn't cover that, but this money is not taxable income. That's one of the great benefits of it. Any of these qualified loan expenses that you qualified for, it's not taxable income. So
there really is a Santa Claus. I can't believe the good news. Plus, number one, we've learned the PPP, the whole thing is forgiven. And number two, it's not taxable. Holy cow. And our practices are still making money, at least for most of us on the call today. This is in the end, there's a silver lining.
Nicole submitted another response there, and she said, wow, in all caps with 3 exclamation points about it all being forgiven.
Boom.
We just made her day.
That's right.
Yeah.
All right, guys, let's see. A couple more questions we've got here. Ramsey is 65 years old and an independent contractor with no employees except himself. Can he deduct his Medicare premium as group health insurance in the 40%?
Medicare premium. I don't think that will count as group health benefits or group health insurance because you have no employees. You don't have a group health plan. So I would say no. That would be my best impression.
I agree with you. You might find an accountant who disagrees and will put it in and try to get it through.
He can certainly try with his lender.
You can try with your lender. All I can do is say no. That's what my daddy taught me.
That's right.
But always be honest, though. I always want to be honest. Never lie.
Yep. And it seems we have at least probably 3 more questions on the same topic. So I just want to make sure it's very clear. We have another question asking if the 60-40 ratio is set, or it can be more than 60 that goes towards payroll and still be forgiven. So we have at least 2 or 3 other people ask that question. So just to reiterate that one.
All of it can be on payroll.
Yeah.
Yeah, 60 is a minimum. It's a minimum.
Was to encourage you to keep hiring people, but they realize that, some people might not want to come back to work. They got their life changed and they don't have the need anymore. They have the unemployment benefit that's really healthy. I think in Idaho, they're actually paying the governor aren't they paying $1,500 if people go
$1,500 if you come back to work. Yeah,
What?
we had assistants and hygienists ask and say, "Hey, how do we get this? We just saw this note that we can get $1,500 if we go back to work."
That is funny.
So as long as it's not coming out of my pocket, I'm happy to help them.
In the end, it does come out of your pocket with inflation
That's true. It's taxes.
or property tax.
That's right.
And another question we got is from our very first webinar, and it's asking if costs for eAssist count as employee expenses, which is something that was stated in our original PPP presentation.
And there were no. The answer is no. At first there was some guidance there saying yes, it could, and then just like how the SBA's changed stuff, no. The answer is no. And your lawn care isn't either. Another independent contractor work that you do isn't either. Right, Taylor?
Right, just utilities that you can deduct, business utilities, but you're right otherwise, yep.
And we did have somebody else ask specifically about medical health or medical insurance counting as part of the total payroll cost. Taylor, can you just remind people exactly what you found when you looked into that?
Can you repeat that, Sarah?
Whether or not the medical insurance is counted in your payroll.
Yeah, so group health insurance, right, or group health benefits, that is included as part of the definition of payroll, but that's the only thing I see in terms of insurance.
Yeah. If you're just a practice and you as yourself are paying your family premium through your dental practice, but you don't have any of your employees on a group health plan, that's not going to count.
Yeah. Another question we had is a good one. So Kristen said that all of her staff has come back. She hasn't reduced any of their hourly wages, but they also get monthly bonuses that they probably won't hit. So how is that going to impact her forgiveness when it comes to the reduction in their pay?
Depends on what she put on her application. Did she put those, if she put the bonuses on the application as the amount that she's going to get,
Well,
as long as it doesn't drop her below 75%, she'll get full forgiveness
Over a period of 6 months too.
Yeah, 6 months. So they have 6 months to get that back. But yeah, so as long as those bonuses weren't more than 25% of the paycheck, and if that was on the original application. If it wasn't on the original application, then it doesn't matter. But if it was on the original application to get the loan, then as long as that doesn't dip below 75%, the full forgiveness.
And Brian, the only caveat I'd add is it's definitely relevant on the original application for purposes of determining your loan amount. But otherwise, right. I think now at this point, on this question, they'll go back and look at the relevant comparison period. I think it's Q1 for this year. If we're talking about, wage reduction, was it more than 20%?
Right, good point.
Yeah, and so you'll just make that analysis and go back and look. But again, there's language in the act that says if you restore people, and so if you can swing this, if you restore their pay, then this potential reduction to forgiveness doesn't apply to you by the time that you apply for forgiveness.
Right.
And there's a question on the application form right now, exactly how you determine if you restored them and by when. And that's something I'd lean on my lender on, and I'd push hard for what the actual act says.
Yeah, I would tell them I'm paying them currently the same hourly rate now and have been, and it's still during my cover period, so I should be forgiven.
Yeah. And correct me if I'm wrong here, but my understanding is that you have all the way till December 31st to pay them those bonuses. For instance, if what we're saying, the lender pushes back and says, no, you're not, and you're not going to get off forgiven, you just fill out the form and you end up with some extra stuff that's not forgiven. By December 31st, if you do have a month where you have the bonus, it doesn't matter when it happens, as long as it happens before the period that the loan is closed. That's one of the changes in the Flexible Act, right, Taylor?
Well, that's what we're saying, and that's what we're suggesting you should do, and or talk with your lender about. The application they just came out with, you could read it. It's not crystal clear. You could read it as documenting like an annual average pay amount. And so that could impact, how exactly, that analysis works. But so that piece is a little unknown, but I would do what Warren suggested and talk with my lender and say, this is what I think I'm going to do. Are you guys all right with that?
Right.
And then move forward.
Until there's another interim rule or something like that, it might be up to the lender's discretion.
And James, the only other thing I'd say, everyone doesn't automatically have till December 31st. If you're electing for the longer period, you have 24 weeks from when your loan was initiated.
Right. Good point.
So whenever that is, right? Of course. But
Yeah.
Kind of a given.
Thanksgiving
Yep.
might come sooner than later. But well, this has been wonderful. Sarah, let's close off the questions. If you have any others, you can email them to Sarah and the email address. And it's in the chat box there. I want to thank you for joining. I hope you found it helpful. We enjoy doing this, right, guys?
Yeah.
Right.
Absolutely.
I mean, we love the industry. We love the practice of dentistry. And if we can help you have more peace of mind and during this troubled time, then we even feel better about our lot in life. So we're trying our very best to make it great.
Thank you, everybody. That's great.
Thank you.
Thanks.
Thanks,
See
everyone.
you.
Bye.
See you again.